Welcome back to another trade recap, guys. I was just thinking that I really do like this method of trading. It makes sense because it's not really pattern trading. It's more like the logic of the market and why it should do what it does. But man, I'm telling you, there's like setups that are really clean, and then there's setups that are not clean and that are a little bit more trickier. And like, it's just like, bro, it makes me nervous as hell. This one that I took was kind of tricky. And I'm going to go over what my bias was from top down and why I traded the way I traded. If you want to see my analytics, I'm currently trading this session in, I think it's April 2018, with just made 6%, so that's good. 83% win rate right now. 5 losses to 1 wins. And yeah. Pretty good. I'm getting better at filtering out my prices and not taking trades that are low probability, I guess. Again, this is still not a very crazy sample size. And quite frankly, while I do love trading this method, I still do get nervous taking trades sometimes. And I guess at the end of the day, I just need to stick to my rules, but it's just like, you know what I mean? So this trade was a little bit tricky, but I'm going to go over everything from top down. So coming into this day, today, this is a Thursday, essentially I was leaning more towards bearish. Why am I leaning more towards bearish? Because we tapped into this level here, as you can see right here. And when we tap into a level like this, actually before that, as you can see, we've literally just been barreling up here. And we've been aiming for a target, and I believe this is the objective that we're aiming for. One thing that I was a little bit nervous about trading this, basically a retracement, is that it's very lethargic, very small. This is basically generating low resistance liquidity all the way up, which I don't like because you never know when it will be like taken out. Or when the market will start to switch and like aim for all of this low resistance liquidity, because these are very easy draws here. But with that being said, as you can see, I didn't really have a lot of trades, and that's because I was like trading all this. As you can see, these are a lot of really deep retracements, like taking up 50% of the previous candle. A lot of them are overlapping, so it's very difficult to trade in here, which is why when you saw my analytics, I didn't really have that many trades, and this is the reason why. I was just extra cautious in all of this. But once we kind of, I think, broke out of this kind of consolidation zone, I think more so at this candle, I was like, all right, we're definitely aiming for this, so I was trading more bullish now. And then coming into Thursday now, we had already tapped into the target. I was actually looking to trade short on this day here on the Wednesday because we tapped into the target, the swing high here, and tapping into a relevant level can initiate a different phase of price. Now, what's a different phase of price that we could be looking for after we tap into a relevant level, after we've seen continuous expansion to the upside? Well, we can see a retracement or we can see a reversal, right? So, or we can see consolidation, actually. We can see, expansion into consolidation, into manipulation, and then movement to the downside, which would initiate a reversal. We could see a retracement into expansion. We could see expansion into expansion, which is a reversal signature here. So that's what I was more so expecting. I was definitely going in with a more bearish bias for the Thursday here, just because of this level here. And on ES, I don't really think it has a necessarily equivalent level. I guess in a sense we are respecting this bearish fair value gap. As you can see, the bodies are below this area here, and the bodies tell the story, the wicks do the damage, as ICT loves to say. But I was more so focused on NASDAQ because NASDAQ is the one that tapped into this level here. So with that being said, I took that daily bias down to the 4 hour, and as you can see, we're seeing a V-shaped movement here. We're disrespecting bullish order flow, and this signature and price, just looking at it, looked very, very bearish, like we could potentially go down. Sorry for that. I didn't notice this at the time. Actually, I did notice it, but I didn't know if it was 100% relevant, just because technically coming into the day, I wouldn't say we were necessarily overextended. But one of my concerns with this trade is that we didn't necessarily have any close targets. Don't get me wrong, we do have all of this, but in terms of what was close to where we were during the opening, which is this 6 o'clock candle here, there was nothing really close to aim for. So I was a little bit skeptical. But we technically do have SMTs at the highs here. As you can see, this candle never saw these highs, whereas this candle is above these highs here, right? It's a little bit finicky, but it's, you know, it is above them. I think this is, let me see. Yeah, so I'd have to use this one, right? Because this body, technically it's not above it. Is there really an SMT? See, it was kind of hard. Because if you see my notes, I never actually marked out an SMT because it was just a little bit difficult to tell if there was one or not. So, I don't think I really did anything on the 4 hour other than marking out my levels. And it's not really clear whether there is an SMT here or not. Let me see. Yeah, because look, Asia is way above. The only thing Asia didn't take out was this high. But other than that, Asia is above everything else here, particularly this high, right? So there is an SMT from here to the high of Asia, and from, where is it? What am I looking at? What? Yeah, so from here, from this high here to this low of Asia. So there is a SMT here, right? So that was kind of what I was looking at. Tapping into this level can initiate a different phase of price. What phase of price? Probably a retracement or a reversal signature. I think this is more so aligning with a reversal signature, just because of the V-shaped. It's not as sharp as I would like, but it's a V-shaped. ES is more so giving a consolidation into manipulation and then a reversal. Yeah, kind of. This is consolidation, manipulation, and then, yeah, I guess this is kind of like a mini consolidation. We took out this low here, went up. I would have liked to see another initiation of this high, but I guess that's what this SMT was for. We didn't initiate this high because this SMT was put in. So this is our initiation of said high, which put in that reversal signature right there, right? And then, so this is definitely a reversal. We're reversing here in this area. So again, though, I didn't really have a lot of really good targets per se on this. But coming into market open now, what do I want to see coming into market open? Well, ideally, I want to see that 9 o'clock candle open high, and then we then go low, right? So we kind of had that a little bit, but we kind of just started plummeting here. We opened here at 10, so I didn't really enter this until late, but 9 o'clock didn't really do anything. It didn't really give me an SMT. So I had to go until 10 opened high, and then gave me that low, and I was like, oh, okay, cool. But what I'm trying to say is, coming into the 9:30, what do I want to see? Well, if we're going to be bearish, I need to see an opposing move, and by opposing move, I mean we need to go higher to then go lower, right? So ideally, I saw this fair value gap here, so if we're going to go lower, we would want to respect this fair value gap, potentially put in an SMT in said fair value gap, and then go lower. So that was what I was looking for coming into market open. And then I'm looking also for a fractal model, so a 30-minute to 50-minute fractal model. And what is a 30-minute to 50-minute fractal model? A CT closure, which we actually did end up getting here at this 10 o'clock, because we went above this candle's high and closed back within the range. So that's a C2 candle, right? We also had an SMT here because this candle took the high and this candle didn't. So this is an SMT. Should I remove the standard deviation? It's kind of distracting, right? So let's remove it. But we had an SMT right here within this fair value gap here. Right there. And in fact, I would actually go as far as to say this is a two-stage SMT because, yeah, a two-stage SMT with a PSP, which is crazy. So this is actually 3 cracks in correlation. Didn't really notice this at the time, but this is like super, super, super high probability. because you have two stages of divergence, and then you have this PSP here. And what's the PSP? This candle is green and this candle is black. That's a PSP right there. So this is three stages of divergence. So this makes this very, 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 very super high probability. But what else was I looking at, right? So if we were going to go down, because the 9 a.m. candle didn't really do anything, which, okay, so 9 a.m. didn't do anything, so what would I want to do potentially? Maybe trade the 10 a.m. candle. So what would I want the 10 a.m. candle to do? I'd want it to open high and then proceed to go lower. So that was definitely something I was looking at. I was trying to see if the 10 o'clock candle supported expansion to the downside, because the 9 o'clock candle didn't really do that. So after that, I was noticing that we were making a 30-minute model here, where so I was just like, at this point I was like, okay. And then the 50-minute was also putting in a model as well, where it was taking this high and closing back within the range, which is another C2 closure. So at that point I just jumped down to the 3-minute here, and I was waiting for a CISD. So with this, since we're not technically at the high of day, and we put in this SMT, we can technically take the first CISD, right? The first change in state of delivery here. And I decided to take this on NASDAQ. Now, was that the best choice? Maybe, maybe not. I'm actually not sure. Let's see. So if I taken this and then moved it down. Also, since we don't have any necessary targets, I kind of just use standard deviation for this. Could aim all the way for standard deviation, but I just need 2R. So yeah. So you could have taken this on either one, I suppose, because it would have given you the results. Yeah. Either one would have worked here. So because we weren't technically putting in that high of day, I wanted to take the first CISD, which was here, right here. The first CISD. Technically, this is a retracement, but the fact that we closed below this and then we're about to close below here, is, you know, valid enough. Because if we waited down here, it would have probably been like a little bit too late, possibly. So I got like the best possible entry, I would say, here. But yeah, in terms of, I was a little bit nervous about this trade, not gonna lie. Why was I nervous? In all honesty, I didn't see these two stages of divergence. We did have SMTs at the high, and I think one of the reasons why I was nervous about this trade in particular is because we didn't really have any clear targets below us. That's one. And then why else? The other reason is that we're kind of putting in this low of day here, because as you can see, we're at the lowest point of the day. So this is a little bit more tricky, right? It's a little bit more risky because, one, we're at the lowest point of the day where we could definitely see ourselves reversing and going back up into the range. And two, we don't have any low resistance liquidity below us. So this one was definitely a little bit more tricky. I think the reason why this worked out so well is because we had that 2 stages of divergence and the PSP, so technically 3 stages of divergence to really give us that confidence to take said trade. But at the time, I didn't recognize that we had 2 stages of divergence, because it's really hard to see here on the 3-minute, right? So I would have had to been on a higher time frame to really easily see that, and then I would have definitely had to been on a higher time frame to see that PSP be put in as well. So yeah, I was a little bit nervous about this, but glad to see it worked out. I think the reason why I ended up taking this trade mostly was just because the candles were aligning with each other. That 10 a.m. candle did support expansion to the downside, and I focused a little bit more on that, especially for taking this trade, looking at whether we were respecting the fair value gap, and then looking for that first CISD to take the trade and get on side. Yeah, this way of trading is really, I do like it, because it's more about trading the logic of the market and why things should do or have a higher probability of doing what you think it should do or what the market would do. You know what I mean? It's not trading a pattern, which I think is why it's a little bit tricky. And there is a level of discretion involved in trading this way. So it's just, you know, there obviously are models or setups that are a lot cleaner. This one, 100%. I think when you have models that have low resistance liquidity, you're probably wondering, like, what is low resistance liquidity? So let me get my trusty arrow, if I can find it, because I always can never find it. Where is it? Here. So it's kind of like when we're like generating like little like swing highs and lows and like stuff like that, right? And then we put in like the high here, and then we come down, and then we come back up, because this would be our CISD, right? And then we have all this liquidity below us, so we can just go and grab all of that, right? And that's like the best case scenario here. This is like the best case scenario. I guess another instance would be like, so this is like the bearish version of this, but the bullish version of this would be, if we had, if we were coming down and we were kind of just lethargically coming down and we had a lot of failure swings, right? And then we went down and then up and then down, right? So at this point we have all this liquidity grab right here, and we can just take it all the way up here, right? But it really depends on what kind of trend we're in, right? Or what phase of price that we are respecting, right? But these are like the best. These are like honestly the best frameworks to trade. This is definitely more tricky, but I think again, those two stages, that divergence and that PSP, made this a very high probability trade. But at the time, I think I only recognized one SMT at the time, but there was another SMT and a PSP, which I feel like if I had saw that before I went into this trade, I would have had a little bit more confidence. So I do need to work on that. I do think the results are speaking for themselves right now, which is really good. So what I want to do is continue to get a higher R&R. So maybe end the month off with, I don't know, definitely 6% plus. I do not want to end the month off below that, but I mean, the good thing is that, like, if this was a challenge, I would have passed it. The only thing, it would have taken me, like, 3 weeks to pass, but, I feel like if these were full TPs, then these obviously did not get to full TP, so I had to take some off. That's why these trades are a little bit short. I'm trying to really minimize these trades that are short and trying to maximize the ones that hit full TP. But it really just is a matter of stop placement, and stop placement sometimes can be tricky, especially if you get into a trade late. So yeah, this method is a little bit tricky. But I'm trying to get better at using it and trying to get better at reading price. But I do like it. It's definitely a method of trading that can work in any year, any month, any day. And it's really like, it's basically, I honestly feel like it's just how the market works. Like, this trading method is just how the market works. It's not pattern trading. It's more about the logic of why the market does what it does and should do what it does, and why it doesn't do what it does, and what it can't do, essentially, you know what I mean? So, yeah. In terms of targeting, I use this anchor point here. And obviously I could have taken this to full standard deviation, but I don't need all that. So with that being said, let's see if we can get full standard deviation here. I can't see. So ES already hit standard deviation, so that is definitely reason to... Oh, they actually both hit it. Yeah, so as you can see, standard deviation is very overpowered, so I actually could have went for a little bit more, right? But I am honestly just good with 1 to 2. But yeah. This was honestly, this worked out, but this was a very risky trade, honestly. But yeah. With that being said, if you have any questions, leave them down in the comments. Don't forget to like and subscribe. And just one more thing, tell me if you guys like these trade recaps. I do these trade recaps just because they're a lot shorter, a lot more digestible than the more long form content. And right now I'm in the process of, getting better at trading, and I don't really want to enforce bad habits by doing long backtesting sessions, trading in a way that is not, complete in a sense. I'm still learning. I'm still trying to get better. I'm still trying to get more comfortable with this way of trading. So that's why I'm doing this longer form content. When I get more confident, and I trust my process and my ability to perform in the market more, I'll definitely do more long form content. But right now, I'm just trying to trade with myself, trying to figure out the system. And anytime I get any wins, I just want to document it and let you guys know what I'm looking at and how my thought process is changing. So yeah, with that being said, I will see you in the next one. Have a great day.